Hey everybody, welcome to this week's Ag Commodity Corner Plus podcast. It's week 44 and today is Feb the 6th, 2026. It was a big week in the markets, a lot happening. Mo, what's our title for today?
Making soybeans great again. This was a big surprise, plus fool's gold. We'll talk about that here in a second. Let's get into it with the summary weekly quote chart. And every week there's some highlights. I don't know why, but there's always something going on by the end of the week. So I hope you guys are enjoying the podcast. Don't forget to subscribe to the channel so you can get notified, and we can do more of these every week, and maybe we'll pivot to every day. But for now, it's every week. So soybeans up 51 cents. I was a little disappointed with the close today. Still closed higher for the week. Still closed above our ceiling at 10.89 3/4. So that is a win. Soybean meal also higher for livestock producers out there watching this podcast. Be careful. Meal could jump on you. We're not getting the technical bull sign yet, but anything above that 308, 309 on a weekly basis is bullish meal. So we're not quite there yet. Soy oil also up strong because of 45Z news this week. We'll talk about that in our podcast. Canola up 12, breaking above the ceiling at 650.9, and that 45Z news in the U.S. was also bullish for canola. Long-term, cotton, can't help cotton, new low. I don't know what we're going to do with the farmers in the South. They're now talking $44 billion for U.S. farmers this year in terms of subsidy. Well, I call it subsidies, but payments to help you guys out. Hogs, still on a roll, on fire, up another 280. That's a new contract high. And then we got the Dow, 50,000, new contract all-time high. That despite some weakness earlier in the week because of tech. We'll get into that. Bitcoin, that fool's gold, digital gold, is maybe no longer what everybody thought it was going to do. Breaking 80,000, we were concerned about that. We hit a low of 60,710. Wow. Crude oil, a lot of geopolitics moving up and down depending on the talks with the U.S. and Iran. We got some, they're talking again today. Natural gas all over the map because of this Arctic blast this past winter. We've had a few of them. It looks like we're going to get one more tonight with a minus 31 out here in the east. And then gold all over the map, but closed the week higher. Silver closed the week lower. So let's get into it. Let's start off with this gift from Trump.
The big story this week was Trump announcing that China may buy an additional 8 million metric tons on top of the earlier pledge of 12 million metric tons, taking that total to 20 million metric tons in the near term. This was a surprise, a bit of a game changer, and possibly taking that 25-26 U.S. soybean ending stocks figure closer to 100 million bushels, possibly.
Yeah, so the USDA lowered the U.S. export 25-26 soybean program down by 110 million. Since November, we're down to 1,575, and we've talked about this in past podcasts. For those who are watching, I hope you're taking notes. The rest of the world, without this announcement, only needed to buy 229 million to meet that target. Guess what? 8 million metric tons is 293 million. We just met that target if realized. The trade is still so bearish they're denying it. I think next week, if we get any daily announcements of beans to China, it's going to squash all those naysayers. We've been saying for months that this is about politics, not economics. Stop thinking that it's Brazil's cheap or the harvest is around the corner. It means nothing. China could buy all the beans in the United States and pay $5 more per bushel, make you guys wealthy. And it wouldn't matter because it's so small in the grand scheme of things. This is, I think these are goodwill purchases that China will do ahead of the meeting between Xi and Trump in April. So you can see here the old head and shoulders top formation when we're in the dark. That support was around 10.25. We are approaching that old support becomes a new ceiling.
11.25 more. I think.
Oh, sorry, 11.25. So if we break back above that 11.25, you're going to retest these highs and then maybe even move higher. But you can see how beans have gone parabolic. RSI is getting very overbought. This almost looks like a gold chart or a silver chart. Wow. Amazing. I never thought that was going to happen in February. So this is a big win.
Let's spend some time on comparing some of those other assets, including Bitcoin versus gold versus silver and versus the S&P 500 stock index, as you guys can see there on the chart. So Bitcoin has been the best performing asset or commodity since 2020, up a whopping 955% during that time, followed by silver up for 26%, even despite the recent plunge / correction. Gold up 327% and S&P 500 gaining 113%. Bitcoin, like Mo was saying, was considered a digital asset or a digital gold asset, but that has lost a lot of its luster in the past year and has fallen by about 50%, while safe havens like silver and gold, which we've been talking about recently, fell by 19% and 31% in just one day, and that was on the 30th of Jan.
I don't know how you can call gold and silver a safe haven anymore. When you fall 19% one day, 31% in silver in one day, and now Bitcoin down 50% in 1 year, the chart does not look good. But I've taught you guys that when you're well below the 200-day mean or average like Bitcoin is today, that's a buy if you believe that Bitcoin has a fundamental value. Warren Buffett, who has a 5 million % return since 1964, says it's going to zero because it has no value. I'm not going to disagree with a 5 million % person. So buyer beware on the Bitcoin, the silver, and the gold. I still think we talked about the top in gold and silver. We warned about it in past podcasts. Be careful, especially if you're buying paper. They've done a lot of damage on the charts, and I still think they're moving lower.
Spend some time on the stock market. We did touch upon it earlier, but the top 6 Mag 7 stocks have been reported to spend about $650 billion in AI spending just this year, and that has spooked investors and caused them to sell big tech names recently. So we had a bit of a stock market correction recently. And despite this tech fear, the Dow hit new all-time record highs today, soaring above 50,000. And this happened at a time when the Nasdaq corrected by about 7%, but investors were back to buying those big tech stocks today.
Yeah, so if you look at this chart, these are your Mag 7. These are incredible numbers. Who's the beneficiary? It's one name, one supplier called, anybody guess? NVIDIA. So this is very bullish for NVIDIA. And NVIDIA, by the way, reports on February 26th. So this was, I think, I couldn't find a reason why the NASDAQ was correcting down about 7.5%. We had a better day today, the Dow at new records. But I think it was fear that maybe some of these companies are overspending. From Amazon to Google just reported this week. But I'm not concerned because they need to be on the offense if they want to stay ahead of the competition. So I still think long term they're going to win.
The IRS and U.S. Treasury on Tuesday released proposed revisions to the 45Z clean fuel production credit. And this was good news for the market, and the market had been waiting for such updates. The updates would extend the credit through December 31, 2029. The update also requires the eligible feedstock to be grown or produced in the US, Mexico, or Canada, and it introduces new restrictions on foreign entities. The biofuel producer would get as much as $1 per gallon, while US farmers could get as much as $0.08 per bushel for participating. funds cheered the news with higher soy oil futures.
So you can see this is the daily March 2026 soy oil daily futures chart. You can see the bull market channel. When I put in my red lines, my channel, we're above the 200 again. It remains within this channel. This is your bull market. It's intact long term. Sometimes the funds will overshoot it like they do up here. And then sometimes they will undershoot it like they have here recently, waiting for the news. We still need some more clarification, some other things like the RVO, but this is good news, going in the right direction. And don't forget to try our program. Very few in the trade will do what we do. We like to stick our necks out. We like to predict the future with some accuracy, and we put out changes in trend. Technically, when we get a change in trend, whether it's higher or lower, we'll let our clients know. We had one this week in soybeans, soy oil, canola. Sign up to the program. We'll send you that report. We'll give you all the numbers. Unfortunately, I can't give everything away. I'd love to give you all those numbers today. So where do you need to put in that target for canola, or whether it's for soybeans? If I have a March soybean contract, what do I do with it? Sign up to the program and we'll give you all those answers.
And next week we have the Feb USDA WASDA report release, and these are some of the market analyst estimates for corn, soybeans, and wheat. US 25-26 crop, corn figures for the ending stocks coming in at 2.23. Similar to what we had in Jan, slightly higher though. On the global side of things, corn again, similar to last month at 290, soybeans slightly higher, and wheat at similar levels. I think the big story again would be those export numbers, Mo.
Yeah, this is going to be a dead report, a kick the can down the road. It's usually a non-event historically. I don't, maybe some slight changes here and there, but nothing big. I think when it comes to soybeans, now that we have heard this news that maybe China will buy 8 million more metric tons of U.S. beans, I think they wait. They wait till the quarterly grain stocks report. They wait to see if China is actually buying counter-seasonal before they make any moves.
Something else that we spoke about, Mo, in January to our clients was which were the big winning and losing commodities during 2025. And as you guys can see there, this is just for the month of January, but for the whole of 2025, the overwhelming winner was silver, which was up by about 141.4%, followed by gold 64.4% and copper 41.1%. Livestock were among the major winners. Just for the month of January 2026, the big winner is heating oil, followed by natural gas, and then rough rice, a lot of those energy commodities benefiting from the cold weather. Again, this one's just for the chart is just for the month of January. The big losers, cocoa down by about 31.33%, sugar off by about 4.93%, coffee off by about 4.73%. And if you look at 2025 as a whole, again, cocoa was among the losers. The other one was orange juice, which was off by 59%, and rough rice again featured.
Yeah, so typically we like to use contrarian views when looking at this stuff. So what performed very well usually becomes a poor performer and vice versa. So I still think livestock and energy could be the big winners again in 2000. Well, mostly livestock. I don't think the metals can keep up with the performance they had last year. I think energy, there's still, again, too much global supply of crude oil. So I think we're going to remove some of those geopolitical risk premiums. So it would be nice to see maybe the eggs come up to the forefront. And I'll talk about that a little bit more here at the end of the podcast.
Again, going back to some of those geopolitics and headline news, there was headline news on US-India trade deal, which was friendly for soy oil and DDGs. Trump says that US and India reached a trade deal, will lower tariffs immediately. Trump said India committed to stop buying Russian crude oil and to buy more from the US and potentially from Venezuela. Urgency maybe was after urgency to get to this trade deal was after there was news that EU and India signed a trade deal last week. This news boosts expectations that India will once again become a major buyer of U.S. soy oil.
Yeah, so it kind of added to the news about the 45Z. There seems to be a trend with Trump. I'm not sure it's a trade deal. I think it's just a framework. I don't even know if we'll ever get a trade deal. So anyways, we'll see. I mean, he's been upset with South Korea that they didn't follow their trade deal or framework. So we'll have to find out whether these countries will start to execute.
This week, we also received the Stats Canada grain stocks report as of December the 31st, which was friendly bullish versus expectations for canola, oats, and barley, but it was bearish wheat. All major crops, excluding corn and soybeans, as you guys can see there on the chart, are the stock figures are higher year on year. And in the case of some of those specialty crops, including peas, flaxseed, lentils, rye, the year-on-year increase is steep. We will see strong demand coming. Will we see strong demand coming for the rescue in 2026?
Well, I think as of March 1st, that lower tariffs from China on canola is beneficial. So I still think that Stats Canada, AAFC, and USDA are too high on ending stocks, too bearish on demand. So yeah, I definitely see demand coming to the rescue.
Let's look at weather for a bit. We could see ENSO neutral conditions by May and a super El Nino by August, according to some. La Nina is expected, which is currently ongoing, to linger for some time before likely giving way to neutral Pacific conditions by May of 2026. When ENSO is neutral, water temperatures stay around the average level, leading to more stable weather and potentially better crop yields. What do you think, Mo?
Well, so I don't know if these events move as quickly as they're suggesting, number one. Number two, when you get to a value of 2 or greater, a super El Nino creates a lot of wet weather in the south, but can create a lot of dry conditions for Western Canada. So I wouldn't be surprised if you see a lot more wildfires, record smoke, and it's kind of a mixed bag for the U.S. Midwest. It can create a lot of volatile weather, so we'll have to wait and see. Projecting this out this far out, probability is 40 to 60%. They don't get it right, so we'll have to wait and see.
And today we received the latest CFTC update on the managed money positions, and this is as of the 3rd of February. And as you guys can see there, a lot of buying happening in the grains. In corn, managed money funds bought about 3,264 contracts, short covering and reducing that net short position to over minus 68,000. Soybeans, on the other hand, they added to their net long positions, which is up by 11,511, taking the net longs to 28,832. Canola there again, more buying, which we've been seeing over the last few weeks, taking the net short covering to minus 42,601.
In real time, we have soybeans probably long 70,000 after this week's buying. We flipped to a long position in meal. We're long soy oil, that probably upwards of that 20,000 long. Still short wheat, but we're even canola. I see a trend where the funds are now starting to get a little bit longer, the ag complex. So is there some money flow, fund flow, from silver, gold, Bitcoin into the ag complex that really is undervalued? If that's the case, that's a big win going into the spring and summer. So let's hope that continues. Until next week, thanks for watching. Stay safe and
Did you have a saying?
Oh, yeah, sorry. I had a brain fart there. Never follow the crowd. Be fearful when others are greedy. Be greedy when others are fearful. And behind this little saying, you can see the image there. Who is that? That's Warren Buffett. this week, when the Nasdaq was falling down 7%, some of the tech names, you had a drawdown of about 30%. When you get 30% drawdowns for really no reason, other than maybe some short-term sellers taking some profits because maybe they weren't happy. They weren't happy with the beat. You know, they beat for a quarter. They provided higher guidance in Q1, and yet it still wasn't enough. Like sometimes, I'm sorry, but that's ridiculous. So that's why we play the long game. But never follow the crowd. I really believe in this old saying because it does work. Again, thanks for watching. Take care. We'll see you next Friday.
Bye, guys.